Hello and welcome to Building Tomorrow's Insurer, the podcast where we dive into people, platforms and ideas reshaping insurance from the ground up. I'm your host, Nigel Fellowes-Freeman, and today I'm joined by one of Europe's, you could say, most ambitious digital brokers, very much reshaping how SMEs access insurance, and that is none other than Eric Mignot, who's the founder and chairman of Plus Simple. I did a little bit of digging, Eric, before we jumped on this call, and I saw that your background very much spans leadership roles at the big end of town, folks like Hiscox, AXA, and so very much have this unusual mix of these very large corporate traditional insurance experience, but obviously you're bringing it to bear very much in a startup at Plus Simple. And it's really, I think, when I kind of looked at the business, it jumped out in terms of partnerships being very important, automation being very important. And I'd love to chat to you today about what are the cultural shifts that are needed to drive change. And I'm sure you've seen a lot of that in terms of the intersection of tech, data and trust. And so, look, I'm really excited about the conversation. Thanks for giving us some of your time.
Likewise, thank you very much for having me. It's a pleasure to be with you.
So, Eric, I think a story always works well, and it when you start from the beginning. And you've obviously had a super interesting career to leading you to your point where you are now, from like CFO at Suez and MD at Hiscox. So can you talk us through maybe how you arrived into the insurance industry, and then what maybe catalyzed that move going from corporate world into startup land?
Yeah. Yes, actually, I was fortunate enough to navigate through different geographies and industries, which was really instrumental to forming the view that there was a big opportunity in the insurance industry. To make a long story short, I started many years ago in Latin America in the telecommunication industry. And as you well know, telecommunication went through massive change over the years, coming from an like engineer-driven industry that was very dull to something quite like customer-centric, very fast industry, very dynamic. And that happened in a matter of 20 years. So after telecommunication, I worked on the utility side in Latin America for 10 years, which was really interesting to see how, like, at a continent level in Latin America, things were really changing fast with the massive investments that the World Bank was doing in Latin America. And then I started to work in banking, again, an industry that really experienced massive transformation. And I was fortunate enough to lead what became the largest digital bank in France, called Boursorama. We started with 0 clients, and today it operates with 7.5 million clients. Wow. So again, the idea of like technology, traditional industry, something may happen in that context. And after running the bank, I started at Hiscox, which was kind of a discovery for me, the insurance industry. As many other people, I discovered the industry by chance, and actually I loved it, which sounds weird, but it's the case. Actually, I wrote 2 books on the insurance industry because I really think that it's a unique, fascinating industry that really goes beyond being an industry. This is something that is both political, strategic. There is really something that is has to do with human relationship in the insurance industry, which I found fascinating.
How did you, Eric, sorry to interrupt you, how did you go around about writing a book? Was it something you'd always wanted to do? Were you always into writing and literature, or is it just there's an itch you had to scratch?
No, maybe 2 things. One was that when I started in the insurance industry, I I like to read a lot about the new industry I'm coming in, just to understand it better. And actually, the number of books that were written about the insurance industry are very technical, but there are very few books on like the history and why are things
The way they are.
transforming over the centuries, the 40 centuries it has lived through, how things have evolved from Babylonians to today, which I thought was a good angle for maybe students or new professionals that join the industry. So this is what I missed, and this is what I wanted to share what I learned.
Interesting. And then what took you from Hiscox into startup? What was the catalyst from there?
Yeah, the catalyst there was that at Hiscox, that is a very smart insurer, very marketing-driven insurer, that is doing a lot for small business. I realized that actually small business was a really interesting segment that was underserved by the industry, and where the name of the game is not that much the loss ratio, but the expense ratio. And as newcomer to the industry, everybody was at Hiscox was telling me, small business is great, loss ratio are fascinating, etc. And I was wondering, how come don't we make more money about being that big on small business? And I calculated the expense ratio, which was truly awful, because of the way the business was operated, which is like very corporate type of approach on how to manage a business, versus something that had to be much more retail, technology based in order to lower big time the expense ratio. So this is how the idea of creating Plus Simple came.
Wow. So really this core insight was expense ratio, and how could you drive efficiency to drive down the expense ratio and actually make these small business books profitable?
Yeah, exactly.
Super interesting. And so then you founding a startup always sounds easy, but actually building them is hard. And so what were those first kind of few hurdles for you in terms of thinking, okay, this is what I want to do. This is the deep insight, the unfair advantage I have of knowing this expense ratio is an important thing. How do you then go from that to, I don't know, raising capital, finding a team, like all those pieces that take to kind of get out the gate?
Yeah, there is always some kind of luck factor into it. So basically, I thought, okay, I know exactly what I want to do, but I'm incapable of doing it alone. So I need to find myself some co-founders to launch the business. One had to be, from the brokerage / insurance industry, knowing technically all the details on how to operate the business. And the other one had to be from the tech, with a tech background, strong tech background. And I had two very precise people in mind, but you never know if they are going to be interested, right? So actually, I was going to call Anthony, my first co-founder, the insurance guy, on a Wednesday. And on Tuesday night, I received a phone call. Anthony telling me, "Hey, I heard you left Hiscox. I really, really want to work with you." And I say, "Oh, you know
I was going to call you tomorrow."
I was going to call you tomorrow. So that was the first one. And the second one, Salah, was part of the team at the bank, and he was heading the tech team at the bank. So I decided to call him, and he told me, "How do you know?" How do I know what? I just received my dismissal letter today. so, so it's like when the stars align and they tell you, okay, this is the right moment. Okay, that was the right moment actually, and we started, the three of us, from zero, and then we started to raise some money. I sold my apartment. I put all my money, in the game, and then we started to raise some money with fantastic business angels that co-invested with us at the very beginning, and then all the story started.
That's wonderful. And so what was you had that core insight, and then what did you what was the strategy from there in terms of I suppose the blueprint that you were then trying to put forward? I suppose when I looked at it from the outside in, very much a digital broker, which is like super simple UI, super beautiful UX, like simple product. Can you kind of talk us through a little bit of that around how you then thought about putting this together?
Yes, I think over time we have built 4 assets. So let me start with the beginning. The first one is on the clients, the segments. Actually, small business was very clear, and small was less than 10 employees. So really, the very, very small companies, freelancers, sole traders, etc. And as we started to work with those segments, we realized that there were 2 competitive dynamics on those segments. Part of the market was commoditized, just as retail. So at the end of the day, acquisition cost and price were the name of the game. Like insurance, a florist is commoditized, but there were, the so-called niches that were underserved segments where the appetite of the insurer is very low, either because it's complex and small. So the combination of complex and small makes it unprofitable for most of the composite insurers. So there, the name of the game is capacity and getting access to capacity. And at the same time, because everybody focused on one small niche, everybody is subscale on operating on those segments. So the name of the game was to address all the segments at the same time and break the glass ceiling of being subscale on those segments. And how was it possible? This is the second asset that we built. One was to lower the acquisition cost to a minimum level. So basically, we started to work with brokers and small brokers, because again, small brokers do not know how to work well with big insurers, because it's costly to operate. There is too few business to justify it. So we built the largest network of small brokers in Europe. As of today, we are operating with 14,000 small brokers in 5 countries. So that was the second kind of insight. The third one was technology. So basically creating a technology that would digitize the full value chain end to end, from being able to prepare a quote in 3 minutes or 2 minutes up to booking. So basically we create a quote for a taxi driver. It's sent by the broker to the client. The client signs online, pay online. As soon as it pays online, the let's say 100 euros is split into 3 different insurers, 8 guarantees, 3 tax rates, and the accounting and the cash management is done automatically. So we are both a wholesaler and an MGA operating through a unique platform that is basically killing all the cost and transforming the high variable cost into high fixed cost through that platform. And it allows us to operate more than 70 binders, delegated authority, which at our scale would be impossible, right? But thanks to that technology, that really kills the complexity of operating in that space.
And did you, Eric, when you took, so that's super interesting. When you trying to break that down a little bit, when you went to start to think about maybe let's go to each of those individually. So first of all, looking to build a community of brokers. Obviously, that can take a long time, and obviously, I'm sure there's a flywheel effect. But I'm sure early it was kind of hand-to-hand combat almost in terms of going out and just speaking to these brokers. Was there anything in your previous banking experience when you said you started to scale that bank that you used when you kind of started Plus Simple in terms of learnings that you took?
Yeah, there were many learnings. The first one was that direct acquisition was really not a good idea because the acquisition cost, all in all, of a small business in Europe is probably around 800 euros. Wow. For an expected commission that would be around 100 euros. So that means, there is no way you can be profitable operating, and all the direct-to-consumer plays went bust.
Yeah, 8-year payback periods, a long payback period.
Yeah, it's uneconomical to do that. So that's one learning from the bank. The second one is really about technology and how deep the technology can go. And actually many of the insurtech plays, not only in Europe, in the world, at the very beginning focused on the customer interface part, which at the end of the day is not that complex. Having a great front end, it's cool, but it's not that difficult to do, and you're not building a real competitive advantage, whilst going into the more ugly part, which is technical accounting and rebuilding from scratch an accounting system that fits really the need of what we were doing. That was really hard. That took really a long time, and this is really creating something that is highly differentiating. And this is also one experience of the banking industry, that the value lies into being able to automate the back-end part of the value chain, which I thought was really interesting. And then the customer centricity, and it's actually one of the things I wrote in my book. This is something I really learned in the banking industry, and let me take an example I love. I'm 55. Many years ago, when I would go to buy a computer, I would go to a computer shop. At that time, you still did that, and you would, enter the shop, and the seller will ask you, "What do you need?" And you say, "Well, I need something, to do a little bit of accounting and manage my business, etc." And the guy says, "This is not what I asked. What do you need? What is the speed of the processor that you need? What is the graphic card that you need?" And like me, I don't know, and I don't care. What I need is really and you have this kind of this kind of really difficult dialogue between a technical seller and a customer, right? And when you are talking to let's say a taxi driver, if you ask him what is the level of GL and the level of PI, and they look at you and say, "I don't know. I just want to be insured for what I need," right? And being customer centric in the insurance industry, and especially so for small business, is really, really rare, and very few people are customer centric. And I think this is where the story goes long term. We need to reconnect insurance with the end clients.
Interesting. And you spoke a little bit there to distribution, and from what I read, you had some pretty good early breakthroughs in partnerships. And obviously that's important when trying to reduce customer acquisition costs. Obviously you called out there broker relationships, but I think you had some banking relationships as well as some direct online. And I think Often first-time founders will focus on product above everything, but I think often distribution is the most important thing to focus on as much as product. And so, can you kind of bring that to life a little bit for us in terms of what was there, any specific learnings you had there on distribution?
Yeah. So it's kind of an interesting and something I'm sharing with a lot of new founders in the insurance industry. At the very beginning, there's a bit of a chicken and egg issue where we had the idea, we had started to build the technology, but we didn't have any, differentiating binder. We didn't have access to specialized capacity. So, and the guys who had access to this were the big brokers or the big MGAs. So, the first thing we did is to go and talk to our potentially most direct competitors, which were some of the family-owned brokers / MGAs there are in France, and say, okay, we can build a win-win situation where we bring the technology, you bring all your business that is fit for the platform operating on small business, and you guess what? You're making a very, very little EBITDA margin there because your costs are too high. And they said, yeah, you're right. So basically, let's do that. I manage with Principal, we manage everything, and we share half and half the revenue. So it becomes 100% EBITDA for you, and for me, it's the name of the game is to be able to operate profitably with only half of the revenue, which we did, and that was how we got access to our first specialized capacity with those family-owned huge French brokers that were bold enough to trust us, and actually, those partnerships are still running today because we are both making money out of it.
Interesting, and that's part of partnership, isn't it? It's interesting how you the strategy of putting that together. Having it win-win is really important. I think partnerships, when you go into them, they always fail if one party wins much more than the other. If both parties come in and both are happy, both are kind of vested and invested in the outcome, then kind of partnerships can really flourish. But I'm sure that you've had some experience on when the other side is true and one party kind of wins and the other doesn't, and they kind of always tend to fall away.
Yeah. I mean, two further learnings. I'm totally with you there. The two other learnings is, one is you manage a portfolio of partnership as you would do for a VC portfolio. That is, on 10 partnerships, 2 will do really well, 3 will kind of okayish, and 4 to 5 will just fail, right? And if you're ready to take that risk, then you can build a very profitable partnership portfolio. So that was one of the big learnings about partnership. And one of the other learnings was what's free has no value. And traditionally, we had the POC that all the big guys wanted to do with startups some years ago, testing your technology, and you would do it for free because there is such a huge potential there that I'm ready to sacrifice whatever. But at the end of the day, if it's free, then there is no commitment from the other side. And as soon as there is some significant money involved, then you can hope to have something where the other party is committed. So it's very difficult. In many cases, you don't manage to make your corporate partner pay. But if he's not willing to pay, then probably it's not a good partnership for you.
Yeah, I think what's the Buffett saying? Show me the incentive, I'll show you the behavior. If the incentive is it's a shot to nothing. And if it doesn't work, then we lose nothing. Then it's very hard to get folks motivated behind those things. I think you're absolutely right. Eric, you mentioned there about those 14,000 brokers across, I think it was five countries. Is that what you say? Five countries? Yeah. And so going into different countries is hard. And there's challenges with regulation, language, nuance of culture, all of those kinds of things. Is there lots of founders that listen to this pod are thinking about it or doing it, and whether that's within Europe or whether that's from Australia to the US and all those kind of different permutations? Can you talk about maybe some surprises and maybe some learnings that are like a real wins that you're like, if I was going to do it again, these are the things to bear in mind?
Yes. So since the very early days of Plus Simple, I wanted to be international because I thought that creating a truly pan-European platform was one of a kind, and there is nobody with a real true pan-European platform, especially so operating on small business. So we tried everything and we failed everything. So for so many years, we tried absolutely everything: partnership, having some people on the ground, etc., and not making big investments, but just trying, right? And we failed. And at some point, it crossed with another insight, which was by doing partnerships, we realized that trying to partner with small MGAs was really a bad idea because it was failing, because the small MGAs on paper were a really good fit for us. In reality, they did not have the focus to develop the business. So we started to buy our first partner and integrate the small MGA onto our platform, and it appeared to be really, really very efficient. So we developed what we call programmatic M&A strategy, and we bought 20 MGAs over the past 4 years, and that was the groundbreaking progress on expanding internationally, which was buy and establish MGA locally with the local know-how, etc., and then migrate it on our platform to really deploy the strategy of Plus Simple and make that small subscale MGA scalable in the market. And that resulted extremely efficient. And now 70% of the turnover of Plus Simple is done outside of France. Italy is becoming our first geography. Spain and Germany are like around 15% each of the total turnover, and then we have a small operation in Austria. So the model proved really efficient to expand that way. And for once, I would say that regulation helped us. Because in continental Europe, you have a common set of regulation called the IDD, regulating distribution. And because the platform is such a good fit for IDD, then we made regulation, an asset to go and speak with the small brokers. And we even had some really interesting discussions with regulators, telling us that at the end of the day, we probably were instrumental for the regulators to make sure that the small brokers were operating rightfully, because we were able to produce all, the formalism that is required by the regulator through our platform.
Interesting. That initial insight you had around expense ratio obviously is that key insight that you can then play into those subscale MGAs to say, actually, you're subscale because that expense ratio is an issue. We can take that out by inserting our tech in, and then we then also acquire the nuance and the culture and the capacity, yes, and all the things you want to get within the different geography.
Yeah, actually, you're totally right. I mean, the first lever is really about technology and being able to leverage through technology. The second one is interesting, is most of those small MGAs depend on one only capacity. that is usually also limited because local or whatever. So they found the insurer in Italy that insure trucks. But the day that insurer, pulled the plug out, they're dead and their business is dead, right? So the name of the game for us was to start remutualizing the capacity. So basically, we as soon as we reached critical size, which was actually last year, we with around 350 million euro of GWP, we started to do tender and remutualize capacity into big pool of capacity that was pan-European by construction, and that was also totally scalable in each one of the countries. And this really changed the game and de-risk the operation of operating on those niches where capacity is the name of the game.
It's interesting, right? Because you couldn't have done what you've done now unless you did. It's such an interesting story of just milestones in terms of that initial milestone of having to partner with the family brokers to get into the game, then going through multiple brokerages to then get some scale, to then be able to like play the game of getting your own capacity. And so you can't get to that next level until you've done the level before. It's just a really interesting kind of story of working through the stages step by step.
Yeah.
Yeah, interesting. And when I was looking through from a platform perspective, it seemed that you did lose a lot of real-time data in the system in terms of feedback loops and claims and risk selection and pricing and those kinds of things. And I know that's is very topical. A lot of folks talk about it, but I'm not sure actually too many folks actually do it. I think it's often on a front page, but actually not too many folks actually kind of deliver it. And so can to talk us through that a little bit in terms of the nuance there?
Yes. Maybe two, three insights there. The first one is that one of the issue that we have with small business, especially on complex risk, is that the questionnaire is just a killer. And even the brokers don't understand the questions that we're asking. So here, the name of the game is simplify the access to insurance by making very easy to understand questions and few questions. With 10 questions, be able to insure even the hardest risks. That doesn't mean that you have 10 data points, right? Because you can collect information about the client without asking the question, because it's just public data that you have access to, right? So probably we underwrite with twice as much data points than the number of questions we're asking would let think that we have. And because we are getting public data, then this is also something that secure the underwriting process by verifying online that those data are true. So that's one really interesting insight. The second one is when you're fully automated, then, for instance, we have a ticketing feature whereby all the incoming queries, be it voice, mail, whatever, generate a ticket. And applying GenAI on those tickets is just like fantastic way to leverage GenAI. And actually, we are now just one insight. We are operating in France a bit less than 100 million premium with only one technical accountant. That seems nothing, but in real world, to operate 100 million of complex risk small business would require probably between 10 to 15 technical accountants. So we went from 15 to 1, and actually the quality of the answer that are provided by GenAI compared to what that technical accountant is doing, which is a really senior guy, is beaten almost systematically by GenAI on the quality of the answer. So it's kind of really fascinating to witness that change in how to operate those businesses. And you know what? Sometimes yeah.
Sorry, I could just jump in there just to kind of double down on that kind of that Gen AI piece and the technical accountant. And so just to clarify for me, so that is in the underwriting process in terms of question sets that maybe haven't gone straight through, but need to kind of be reviewed by an underwriter. Is that kind of what you mean there?
No, it's one step further down the value chain. So basically, you book the policy, and there are some endorsements. There is policy cancellation. Okay, there is policy cancellation in the middle of 1 month because let's say the business went bust. So you have to account for the cancellation of the policy. Maybe you had cashed in, the money for the full year, so you need to refund the client, but you also need to repay or compensate for the commission to the broker that you have paid. So it's complex accounting at a very nitty-gritty, small policy, small payment detail, and we operate literally millions of payments during the year. So you can imagine how many of those operations we have, right? And those operations today are fully automated. Even the most complex one on the most complex policies, we manage through GenAI to automate those operations.
Interesting. And did you build all of those? Do you use kind of closed source models? Do you use open source models? Like, how did you kind of go about your Gen AI strategy? Maybe we're getting a little technical, but just interested in how you then thought about your Gen AI strategy for the business more broadly.
So basically, we are operating. So we segregate all the data that we are using, and we make sure that they are not shared through the platforms and the models, and we use a combination of models because we are still. I mean, we are using it at scale. At the same time, we are still improving, the different models and the agents that we are creating. And for some agents, some models work better than the other. So basically, we are testing and learning there.
Yeah, we're exactly the same. We've done exactly the same, trying to be agnostic to model, and I think. Because the models are improving so quickly and things are changing week to week, I think kind of tying yourself to a single model or trying to build all of your own agents when you can lean on like the infrastructure that's been being put in place by the kind of companies, I think is I think you'll fall behind very quickly. So yeah, we're in the same camp of kind of leaning on kind of model architecture. Super interesting. I know I want to keep moving through, and we have quite a lot of founders that listen to the pod, and a lot of them are trying to raise money. And the raising in environment is definitely in the period that you've been running the business has changed and evolved from the franticness of the 21 and 22 to the dearth of the 23 and 24, and everything seems to be roaring back a little bit now. I'm interested in, obviously you've raised over, I think it's 120 million euros, something like that. I'm interested in what lessons can you share with those founders that are looking to raise, like what kind of state the business should be in, like what should they focus on?
Yeah, so the learning was really interesting. So basically, we started to raise 27 million in 2 rounds or 3 rounds of seed series A and B. Like in the good years, but we didn't raise that much money, and it was really focused on building the technology. So knowing why we wanted to raise the money was really important. So it was not to spend on acquisition. It was not to spend. It was really, really focused on building the technology. And then end of 21, we had the kind of the option to go for a Series C or do something else. And everybody was pushing us to go for the Series C, and internally, externally. And I said, you know what? I don't really believe in the valuation that I'm seeing there for Plus Simple. So we took an alternative route, going for a type of LBO with KKR, and raising debt to finance our M&A program. We were profitable at that stage. So the valuation was totally different, and it was really a tough discussion to convince both the existing VCs that they would be bought out with nice multiples, getting cash, from the operation, but that it wouldn't be a paper valuation that would be much higher, but that would be much more difficult to monetize afterwards. And I can tell you, at the end of 21, it was not easy to make that kind of call. But now I'm really happy that we made it. So there are still some sectors where there is some hype. So be really careful, founders, that try to stick to real world valuation. What is the exit? What is a reasonable exit? Being valued over €1 billion without being profitable, chances are that nobody is going to buy you in real world, right? So you better know what your exit is going to be, and then really focus on profitability. But this is an obvious one, because once you're profitable, then it totally changes the dynamic and the pressure that you get, day to day. So really, this is some kind of very basic, advice. And also, debt can be tricky, but if you are able to structure debt in an intelligent manner, then it's probably also it brings a lot of discipline into the company that I think is also good to scale, having that discipline. So it's a really good lever at some point.
Yeah, I think when you some of those big rounds, I think we've seen, and then you've seen the down rounds being 20-30%, and the reality is, if you're then trying to sell at that point, like just getting through the preference stack is pretty tough, and so the preference stack can really get in the way of any of those founders making meaningful returns. So I think that's really good advice. And so KKR took a majority position in the business, and that's interesting.
Yeah.
Interesting.
Yeah.
They're a great business, and KKR have had a wonderful model over time, actually, of building businesses. So it must be a great partner.
Right. Yeah. It is.
Eric, I could talk to you literally all day, and so I'm going to ask you one more question. I'm going to let you get on and have your coffee and get on with your day. But I do the pod is all about building the future of insurance and building the future insurer. And so I'd love to understand, if we were to have this podcast in maybe 5 years' time, I'd love to understand two things. One, which is kind of, what do you think the world's going to look like at that point? Is it going to look more of the same? Is it going to look very different? And then maybe there's some of the bold bets that you're making at Plus Simple that's going to take you into that world in 5 years' time.
You perfectly know, as a founder, that you need to take a strong view on the world and the evolution of the world to position yourself and your company. So, of course, we have that kind of position, and we don't know if it's going to be true, but at least this is what we are. This is what we are doing. So the premise is for Plus Simple. The first one is that customer centricity. I'm 100% convinced that, today, the big thing in insurance is like the finance and actuaries and underwriting is the powerful function in the insurance industry. I'm convinced, just as in the telecommunication industry, 30 years ago, network engineers were all over the place. They were, board seats, running the show. Today, if you look at telecommunication, you have people from very strong marketing, content background that are running the show. So it totally transformed from a dull industry that were nowhere in terms of marketing, a utility, to probably some of the best skills in the world in marketing. I'm convinced insurance will go through the same evolution, which is being much more customer-centric, being forced to be much more customer-centric, to reconnect with the end clients, is going to be where the winner of tomorrow are going to be. And I'm sure we will see in board seats, in insurance company, people with very strong marketing background in 10, 15 years, because it's the only way to compete in the market. The second one is about technology. Most of the, in insurance, I many times heard, the lady from marketing and the guys from IT, like being a bit despective about those two functions that are, second-tier functions in the industry. But those guys of technology, if you, as the CEO of an insurance company, don't understand anything about technology, you're basically dead. You can't be, entitled to run a big insurance company if you don't understand about technology. It's so important. It's so critical. You can't be serious about leading a strategy in the industry without understanding nor customer or technology. So this is really where I think the evolution is going to be. The functions of marketing and technology are going to be much more central in the overall model. And at the end of the day, today, I remember at Discogs, I was a bit, shocking my team from time to time. And one day, I think it was in 2000. When was it? 2011 or 12. I told to underwriter one day, your job is going to be done by machine. And they were like, this guy is nuts. Okay. And actually today, I think that technology is probably much better at underwriting than underwriters, right? So if you're running, a company and you don't understand what technology can do for you, you're basically not the right people in the right place, right?
We fundamentally agree with that, Eric, and I think the speed of change with AI, with agentic AI, with the Gen AI revolution, as well as it's just this another stepping stone of technology shift, right? We just need to think about this as it's just another block of technology that is further enhancing how important technology as a strategy is within in the insurance industry. Because when you really think about it, insurance is a data game, really, and technology is very, very good with data, and it allows you to achieve some of the scale.
On that one, just one insight that I really find fascinating. So basically, underwriters are underwriting based on the past. Today, I'm seeing some really fascinating startups on climate that are able to model through AI all the water
Future
cycle at a territory level. So they can predict what is happening, in the next 2 years at 1 kilometer distance with very high accuracy on the risk distribution on a 1 kilometer scale. I mean, so it totally shifts the way you underwrite, and you need to integrate those, much broader engineering R&D capabilities into your ability to build the model and underwrite properly. So this is a totally shift in how you're underwriting, which I find fascinating.
Fascinating. And yeah, that podcast when we sit down in 5 years' time, I think you're right. There's those models are going to be all part of it. Look, Eric, thank you so much for your time today. It's been so insightful. Obviously, I've watched the business grow over the years, and so it's so great to get an opportunity to sit down and hear about kind of how it all came together. So look, thank you so much for your time today. It's been wonderful.
No, thank you for the very interesting questions, and very happy to have shared that moment with you, Nigel.
Awesome. Eric, look, well, thank you so much again. I hope everybody enjoyed the episode at home as much as I did having the conversation with Eric. If you do want to watch the video version of the episode, make sure you do head over to our YouTube channel. And as always, if you want to hear more from industry leaders who are pushing the boundaries in insurance, please do check out our other episodes of our podcast series, Building Tomorrow's Insurer. So thank you from me, thank you from Eric, and have a wonderful day.